Okay, this is a wrap up for Friday's trading session. Now, Thursday I didn't post anything just because it was a continuation of the rest of the week. I'm sorry, for the rest of the previous trading sessions going from Thursday into Friday. So we had to hold on to a few trades that took a little bit longer than I anticipated. So there was a trade that you may remember earlier in the week. We were talking about the breakout trade here on the dollar yen. Now, the dollar yen, ultimately, that trade, if you look at the Japanese yen futures, which is what one of the things I was using to time the trade along with the dollar index, things are pretty consistent. It's just that with this particular pair, we had that retracement during the New York trading session on Friday that caused that spike. So we were holding the trade through. Initially, the take profit level was going to be 110.95, and we use a 55 pip stop and a 55 pip take profit level from the entry. So the stop was back up there at 112.05. So there's a few things I want to talk about with this trade. First of all, we had that one fake earlier in the week that went to the upside with no 3-pip entry, and then it turned around and went to the downside, another breakout. This isn't necessarily a head fake. This has not turned around and reversed and gone back up. You can still see that we're still holding with this lower low, lower high sort of thing. It hasn't been confirmed just yet until last week's low. Now we've got that in the books, right? We've got the market is closed. We've got this one as this week's low. I'm going to go ahead and put this line in here to start the new week. But until that low is taken out from last week, I really can't expect a whole lot of continuation to that target down here at 110.95. What I'm getting at is that on this trade, I got stopped out, but I used a smaller stop because I could tell as time went on and it wasn't working that if this price swing high right here was taken out at just about 88, 89, then this was likely to not really work out. Now, it didn't hit my stop loss. So it's not like I was changing the plan, but in a situation like this could have easily moved up another 2 or 3 more pips and knocked me out with that 55 pip stop loss. And it wasn't worth getting involved in a trade like this because I knew that if it was going to retrace like this with the news, that it wasn't likely to take out the low and then continue down to the take profit level. So in other words, the trade may not really pay off right away. I'm wasting my time. I'm wasting my money having a trade open like this that I have to carry through the weekend. I have to hold on to it for 2.5, maybe even 3 days. It might go sideways when the market opens on Monday. There are better trading opportunities, and I'll show you what I did the opposite, which allowed me to earn back the loss. But I'll go back to the chart that we were looking at just a moment ago. This was the pound dollar. So the pound dollar allowed me to earn the loss back. I had this open at the same time, but you can see here that with the entry of 1.2899 or the 1.2900 level, I closed this trade at 1.2940. Initially, my target was 50, but as price was approaching my final take profit target, I'm going to open this up so you can see what I'm doing in here because everything's really compressed. There we go. So here is the entry back over here. There's the final target. That was initially my target, but I closed at 1.2940. So sorry about that. We earned anywhere between, it depends on the spread, between 35 and 40 pips on this trade. Now, I could see that it was topping out there, and that was the reason that I closed the trade at 1.2940. And I was pretty sure that it wasn't going to reach that 50 target. It doesn't mean that it's over with just yet. You can see what's happening here. Price is now just settling right at the level that it was starting to break out of when it made that move after the economic data this morning. So it could bounce and turn around and go right back up again. But again, I don't want to hold through the weekend. I want to lock in profits. This gave me the opportunity to earn back the loss on the dollar yen. Now the dollar yen, I can't say that it was necessarily a failed continuation breakout trade. I'll go back to that trade in just a moment and we'll talk about it in a little more depth. But what I want to share with you is that if I experience a loss, it is not hard for me to earn that loss back on the very next trade or two. I just need to wait for the setup. So this was a trade where I wasn't necessarily chasing price. This was clearly a low. And I'll go to the 4-hour chart because I was also using the 4-hour chart to confirm this entry. That's a 4-hour candle that closed at 1.20. Sorry about that. 1.2899. 1.2900 approximately. You can see all of the massive divergence here, and these indicators are helping me confirm this reversal. All I needed to do was just get into the trade once I had full confirmation, wait for a specific entry here on the 1 hour time frame, find a target, and then sit through, this is back to the 4 hour chart, sit through the economic data and trade it to that target. So back to the 1 hour chart, this is where I was able to identify my take profit level. That's where I closed the trade. It gave me the opportunity to earn back the loss on the dollar yen. Going back to that trade, the dollar yen trade, I can't necessarily say that it's a failed continuation breakout trade. It may not work, meaning that it might not go down to the 1.1095. But there's no reason for me to mess around. Very often I say that if the trade isn't working out in my favor, then I need to cut the trade off a lot quicker than just because I could have sat here and left the trade open. It would not have stopped me out using the appropriate stop loss, and I would still be stuck in this trade, not earning much money on this trade. And if it ends up taking until Tuesday before it hits that final target, well, you can see what I'm talking about, trying to determine which currency pair, which trade I should get into based on the amount of time that I'm spending holding onto a position. So in other words, if I'm going to put money into the market, I would like to try to identify which currencies, which currencies, the pairs, are likely to move in a more quicker fashion, like the pound dollar did this morning, as opposed to this one where it's sort of bouncing around. I can see the structure of this continuation breakout trade working out, but the retracements like this are not normal. This is not a typical continuation breakout trade when I trade them, where price retests the stop loss within just a few pips. That's not normal. Usually, if it's going to retest the stop loss, or if it's going to go back up after I get into the trade, it'll hold right around maybe minus 20, 25, maybe 30 pips, and then that's it. And then it'll resume in its downtrend to that target, if conditions are right and optimum for this particular currency pair. But they weren't. Things were shifting, things were changing, and that's why I changed the stop loss. There was no reason for me to hold on to the trade using a 55 pip stop where the news could have knocked me out, and then still the trade could have come back down to that target. But again, I still need to ask and figure out and ask myself, is this one likely to move today to that final take profit target? That's why I changed the stop loss just before the economic data in the United States, and then also decided to take a qualified, confirmed reversal on the pound dollar. It was perfect. Everything was perfect with that trade, and it gave me the opportunity to earn back the loss. This is not a normal continuation breakout trade. When it's set up, it looked good. It was a head fake to the upside. This was most likely at that time looking like it was going to work in my favor. And again, I manage these positions. So as time goes on, I don't turn my back on these. I'm managing this. I'm watching these price swings, these new highs. I'm picking out specific lows or highs depending on which direction I'm trading it in to determine whether or not this trade looks healthy and it's likely to pay what I expect it to pay, meaning to that 55 pip take profit level. And it just didn't look like it had the momentum or the power to move back and pay the 55 pip take profit level. So it's easier for me to find one currency pair that's more likely to reach that target and then earn back that loss quickly. So that's, I get that question quite a bit with my losses. How many losses, do you experience? What do the losses look like? Do you use a stop loss? Yes, I always use a stop loss. This was a relatively small stop loss. How do you earn back the loss? How quickly can you earn back the loss? Now, obviously, the pound dollar moved at just about the same time that this one was moving as well. So when I got stopped out on this one, I was earning profits on the pound dollar. I can't always do that. They don't always set up like that where I immediately get one trade on opposite, the other. So if I'm going long or short the dollar yen, I don't automatically get a trade with the euro dollar or the pound dollar. I have to wait for the signal. I don't trade price just because it's moving around. I need a signal. I need to confirm the news. I need to find out why. So in the next update that I'm going to post, I am going to do a weekend analysis, a weekend update, and we look at the closed market at that point. We look at the daily time frames, we look at the dollar, we look at Japanese yen futures, I also review some Bitcoin if there's movement there. We look at commodities. We try to set up the trades for it next week, looking at the daily time frames and then zeroing in on the possibility of finding a trade when the market opens. So that's one of the things I'm going to be doing later on today or tomorrow. I'll have that video posted up by Saturday evening, California time. And there I'll be looking for the possibility of trading some kind of maybe a reversal. I talked about that in the chat room this morning. I'll go to the HL30 page, which would be the 30-minute chart for some reversals. This is what we're looking at here for the euro dollar. So now that the market's closed, I would put this period separator in here, make some adjustments to yesterday, I guess I should say, yesterday's high and then yesterday's low, which is really Friday. It's still Friday here in California. So if price reaches or approaches the resistance, this is what we're going to be analyzing. Could there be an opportunity to trade off of resistance or support with that HL30 technique? I'll let you know with that update. I'm not looking at the larger time frames. We want to be paying attention to the larger time frames and see what's going on there. That's just about where I'm going to leave this one. So I'll show you basically how I set up my charts for the HL30. And this is the dollar yen. I'm leaving this one alone, and the reason is, and I'll go ahead and share a tip with you with this HL30 strategy. If I see a low for the previous day that looks like this one, right where this one's sitting, you'll notice that Thursday's low was just a little bit lower. And in a situation like that, if price bounces off of Friday's low, I wouldn't trade it as an HL30. Sometimes they work, but what happens is, if I get a reversal candle at yesterday's low, Friday's low, but Thursday's low is just a few pips lower, sometimes they'll print a reversal and then spin around and come back down and retest the actual low. And in this case, it could be the week's low. And if it's the week's low, that's important to me. But this was also that continuation breakout trade to the downside. So I'll review that and tell you my thoughts on that currency pair when I do the weekend analysis. And I'll have that video ready by Saturday. And then I'm going to go here to the... I don't usually trade the HL30s on the yen crosses, like the pound yen or the euro yen. But I do set up the charts just in case. You never know when you get an opportunity to trade them like that. So that's it for this update. Again, it is relatively quick for me to earn back losses. I just need to wait for the pattern. I need to wait for the trade to come to me. That's what I was doing here with the pound dollar. The pound dollar, I could clearly see that divergence. I could see that reversal pattern setting up here on the 4-hour chart. This was a beautiful trade. It may continue higher next week. I have no idea. We're going to take a look at the larger time frames and analyze the data to determine whether or not we could expect it to go higher. So again, stay tuned for that update video, and I'll have it ready by Saturday evening.